Thanks for inviting me here. I believe to this session on dialogue with the authorities, with the other institutions. I think the dialogue with authorities is the essence of the program, of the conduct of the program. I'm sorry for the title. I'm head of the fiscal policy division, but I am the mission chief as well for the ECB.
Sorry,
it's just that we don't use too much this title within the ECB. So I will, in my remarks, given the short period of time, I will just focus on one aspect of the program, which is if you like, the restoring the financial stability of the Greek financial system. There are many other areas which have been illustrated by Declan, Delia, which of course are very, very relevant. Let me just start reminding you the starting point, which was if you like, the crisis of confidence of last year. I mean, banks lost between 40 and 50 billion deposit. The central bank funding skyrocketed to above 125 billion. The deterioration of the portfolio occurred over many years due to the pronounced contraction of GDP, and non-performing loan or non-performing exposure have reached level close to 50%, which is the second highest in the EU, the champion being Cyprus, which has worked extensively on non-performing loan. I was the mission chief for Cyprus. Delia was also mission chief for Cyprus. So we know how much focus was given to this problem in Cyprus, and the experience is that this is really an important issue. Now, let me just briefly touch on what are the main pillars for the reduction of non-performing loan, which is a key to restoring financial stability. There are 4 pillars which broadly we can identify, partly related to past legislative action, in part to implementation, as Declan mentioned. The first broad area is the function, to have a functional legal framework in place, which implies legislation which is conducive to resolve issues in a reasonable amount of time, and an adequate judicial system that has to implement the adequate legislation. Now, why this is important? Because it is important that beside the time which is very relevant to enforce contract from an economic viewpoint, this should be an adequate deterrent for, if you like, an adequate incentive mechanism for borrower and creditor to come together and work solution to various situations which have given reason to a situation of non-performing loan or non-payment of contractual obligation. And this leads me to the second block, which is to have in place an adequate framework to facilitate the restructuring of loans. I mean, whether it is by facilitating by the code of conduct and practices which are enforced and monitored by the central bank, or to have an out-of-court workout framework, which is actually being developed and discussed at present, and which we believe it will be an important element in the discussion over the coming months, with the aim, again, to, if you like, find the appropriate restructuring solution, which will lead to go forward, I mean, both for the bank and for the debtor. So this is important. If there is a situation which is difficult, it has to be passed in order for bank to continue make lending, and for borrower to continue investing, consuming, whatever is their nature. So this is if you like, the second pillar. The third pillar is related to have a framework which facilitates the transfer of a non-performing loan, the sale of non-performing loan, which require legislation on the servicer, which should, if you like, implement the current framework to deal the relationship between creditor and borrower, which has already been approved, and a law which allows for the sale of loans. We know that, and this has also been passed. Now the true issue is to implement it. We will see in the coming months. We believe that the transfer of loans outside the balance sheet would be beneficial for a number of issues I will mention. Finally, there is another, the fourth pillar, if you like, is supervisory activity in order to establish a functioning framework to target the reduction of non-performing loan. This is an effort which involves primarily the Bank of Greece and the SSM, the ECB, SSM, the SSM, which include the ECB and the Bank of Greece, of course. And that is another key issue in order to have a good dialogue with bank to see how to best tackle the problem and how to establish a path for the reduction of non-performing loan over time. So why is this important, this process? First of all, because the bank over time, they should not work as a debt collection agency, but they should over time dedicate their resources to the creation of lending, to the assessment of projects. And this will be at the end of the road. Of course, once the balance sheet the soundness of balance sheet are restored, then this will be possible for the bank. The second is this also over time, bank could use more efficiently, if you like, their capital to expand the balance sheet. So it's a process that you have to go through, and the final outcome is to support the expansion of lending. Third, the reduction of performing loan is key for restoring confidence in the banking system. And I have to say, if you look at the experience of Cyprus, that is a key to restore the confidence of the sovereign. I mean, because the sovereign is polluted, the creditworthiness, appreciation of creditworthiness is polluted by the heavy burden of a non-performing loan in the banks. So, of course, there are other elements supporting the return of confidence. Macroeconomic reform are key. The general performance of the economy, fiscal stabilization are all elements which are important. Within the banking sector, the improvement of the governance is also key. We know there is an important process ongoing in Greece, which is with the aim of having more efficient and functioning, a better functioning banking sector. If we look at what happened over the past 12 months, I would say that we had seen a stabilization of the deposit base over the past 12 months, but not yet a return to the expansion of the deposit base, which is the ultimate goal of this pillar of the restoration of the financial stability. We had seen important improvement in the access to the interbank market of banks, which led to the reduction in the exposure to central bank. Of course, this is true mainly through secure lending, but it's a sign that something is moving. And I believe that with the measures that have been taken by the government in many areas, supporting confidence, the completion of the review, which sends a very important signal to financial market, this process will continue. What I mean is that better access to the interbank market, to the capital market, better access, increase in the deposit base. This is essential because, of course, capital is one of the two elements for the expansion of credit. Funding is the other element, and they, of course, are key to support the function of banks in the recovery of the Greek economy. So I would conclude here.